Good morning, everyone. Let's do the market analysis for today. I'm a bit late today. Okay. Let's go on to a weekly time frame. Weekly we can say it's heading downside. Let's start with the general level marking. Previous day high, previous day low, go to a 4-hour time frame. Let's go to a 4-hour time frame. Let's mark it correctly. This is previous day's high. This is going to be previous day's low. Okay, let's understand what price is doing. As I was saying yesterday, price was in bearish order block, and this order block was just responsible for breaking down of this low. Hence, that's what I was saying yesterday, and you can see the price came down hard yesterday. Let's move to a 4-hour time frame. So what did price do yesterday? What we can see is the price consolidated and it broke down on 4-hour time frame. What are the important levels to watch for is like there is this 4-hour fair value gap right up there. Let's mark it correctly. 4-hour time frame, there is a bullish 4-hour fair value gap. We can see the price is coming down here and it's getting bought up. We have news in 4 minutes, CPI data at 8:30. Okay. This was a low which was taken down. Now we can just start marking the fair value gaps. 4-hour bear fair value gap. We have 4-hour order block. Okay, so that's what happening on 4-hour time frame. Let's move to a 15-hour time frame. On a 15-hour time frame, we can see the price is consolidating continuously. Right? The price is consolidating in a trend line. Now that's a liquidity. Okay, so that's what liquidity was. Now what price did? Came down, went up, came down, went up, came down, went up, broke liquidity, broke the lower level, kept the fair value gap, went up higher, took the trend line liquidity, it came back again. So what we can see here is, see how there are a lot many wicks, and trading in this kind of situation is generally, we should avoid trading in this kind of situations. What could happen is like we can find a lot of setups, but it might not get continuation, and it can take the stop losses frequently. So trading in this kind of setups, you have to be buying at extreme high or extreme lows without high, probably without confirmation, because stop losses will be taken frequently. Now we are watching kind of an SMT right here. See, in London session, price did take about this high. Price did take liquidity right up here, so this was buy side liquidity. It grabbed that, came down. See how hard this was a displacement level, and there was a fair value gap right up here. So this is the fair value gap. Price went up like this, but when it came down straight. So this leg here is displacement. This is the leg which we are looking for. So we are looking for areas in this leg where we can enter short. Well, the trade is complete because it has given its target. It came down all the way till the low. What can we see now? What can we see now? Yeah, news is here. Price is moving up higher. And if we move to a 15-minute time frame, what we can see is it grabbed the liquidity on the lower side and it's moving now higher. Okay. So what happened? See how clean structure was? It took down this low, sell side liquidity, took down this low, sell side liquidity. It gave us the market structure shift right up here, and see how good it was with displacement. We could have entered long here, full fair value gap. We could have entered long here with the stop loss below the low. Targets would be highs. Targets would generally be highs. Now this we have Asia session high as one of the liquidity levels. So these are the moments. See, 1:5. Now this momentum came because of the news. But even before the news, if you analyze the market correctly, what it did, took down the sell side liquidity. It's in 4-hour fair value gap, and it can, if you move to 15-minute, if we move to a 4-hour time frame, it has the possibility of taking out previous day's high for this, because what we are watching is there was an accumulation in this phase, and instead of breaking above first, it broke down first, and hence there are chances that it will take down the higher side liquidity. So what am I looking for? What am I looking for today? If the 4-hour closes like this, if the 4-hour candle closes like this candle, then I'll be looking for longs and continuation throughout this move, targeting this high, targeting this highs. Okay, now let's move on to a 1-minute time frame. Let's move on to a 1-minute time frame. Because we are not in this trade, it's just going to take up the levels. Now watch this. There's this fair value gap, 50% here. What level did we break out? This is one of the breaker block. This is one of the breaker block right up here. So if you want the price to continue, we can enter long here, targeting this as stop loss, marking this as stop loss, and moving up higher. Our first target is going to be this 94 points. First target is going to be this. First target is this. Second target is Asia session high. We have risk reward 1:2. Risk reward is 1:2. And as I said, there are multiple buy side liquidity. This was already grabbed, so we are not going to take a look at this. There is also this another liquidity level of New York session, New York afternoon PM session high 943. We'll be waiting for that. As soon as the price goes up 1:1, we can always move the price, and we can always move the stops to break even. Now we can just wait for the price to take out either the break even stop loss or this high. So we are already up 50-60 points. Let's move to 15-minute time frame. 15-minute time frame, it takes to go higher. Let's change the structure to this. This is a 15-minute time frame. This is 1 minute time frame. We have our level marks, we have our bias. What it's showing is break a block. Respecting this fair value gap, it can have multiple touches for this fair value gap. As long as this gap doesn't get inverse, it's still in the trade. We're looking for this liquidity level, Asia session high, because it already took the London session low and it already took the London session high. We're looking for Asia session high, targeting Asia session high. As long as this fair value gap is still supporting, we should be good in our trade. There are multiple confirmations here. There's a 4-hour fair value gap. Liquidity has been swept multiple times. There's a fast displacement up higher. which side the price is delivering. We have to make sure, we have to understand which side the price is trying to deliver. It can do a multiple runs up and down. If it took down the liquidity, here was the best entry, it went up a lot higher. But which side the price wants to go, that is important piece of information that we want before entering into the market. If we are looking for, if we are targeting sell side liquidities, then we are looking for shorts. If we are targeting buy side liquidities, we are looking for longs. We can have multiple entry points, but the only thing that we have to make sure is that the risk and reward is maintained. We do not want to risk much higher and continue like in between trades. We would rather like to risk here than risk much here. There can be noise here, it can do a lot of structure shift and so on in between here. Still 4 minutes away. It's still 4 minutes away from closing 15-minute candle. I would like to see it closing above this. There are a lot of wicks, but the price is still moving. So if you can find out the perfect delivery side, it could still be in your favor. So this is target 1. Target 1 is right up here at this line. And we have the other target right up here. Okay, this trade is now a risk-free trade. We have nothing to lose here. It can either hit target, it can either hit stop loss. Let's zoom in a little bit. Okay, let me just see if I can. You're watching this fair value gap. Maybe break even stop. See what I was telling you guys this morning, because the price is choppy, it will be hard for us to find a continuation move. It can like if you buy at extremes and just sell, keep selling, then, but that's way too much risk. You can always trade the other day. So there are five trading days, and what I have observed in this 5 trading days is that market generally gives 3 good days, at least 3 good days in a week. And if you can capture those good 3 days, like all those clean setups, you should be good for the week. Days like this, days like yesterday, we can avoid days like these, like price is still moving up higher, it is now trying to test this inverse fair value gap. But what we have to understand is this is a bigger structure. Until and unless it doesn't break out and inverse it here, I'm not going to look into any fair value gaps in between here for entries or exits. You're looking for inside the structures. Okay, just going to wait. Let's it will be hard for us to find continuation, even if you buy on this inversion or this inversion. If you buy here, I am kind of cautious today. It will be hard for us to find continuation. That's the only thing I can say. Okay, let this trade work out in its way. But we are going to start with the top-down analysis on how I do the top-down analysis. First of all, we are looking for on a daily time frame. We can always start with weekly and stuff, but what I've observed in weekly is that it's pretty much side by side. Like, see, since November 2025 it's still chopping. It's not from November, from September it's still in the same range. The price is not doing much, it's just at this range, consolidation box. Now what price can do is sweep liquidity below and move up higher on a weekly time frame. We can easily get good entry points. Like, this is a fair value gap, this is a fair value gap, and beyond here is a good sell side liquidity. What price can do on a weekly time frame, take the sell side liquidity, chop a bit on a daily time frame, sweep liquidity, and then look for a higher side target. So these are the things that can happen. Here there is also another breaker block. That's on a weekly time frame. Because we are intraday trader, I'm not looking that much on these levels. Yes, if the price comes to this level, then I'll be watchful for that level. Right now on a daily time frame, we decide the bias based on the candlestick. Like, see how this green candle, Wednesday's candle, yesterday the price closed below that, which means we are bearish bias today. If the price would have closed above Wednesday's high, then I would be bullish bias today, and I would be looking for sell side liquidity being grabbed, and then we move to target buy side liquidity. Now if we move on to a 4-hour time frame, what we have seen, see how this was a fast fall. Now what we have to understand here is the price broke down, there was a fall, it went up high, and see how this was a good selling side, and in 4 hour it just went straight up. So this is a good displacement. This is a good displacement of this selling. Now we will, even here we would be looking for, like, see how this 4-hour, there was this 4-hour fair value gap, there was this breaker block right up here. So all these things, like, these are the things on 4-hour time frame, that the levels that we are looking for. Once you identify this kind of levels, you move down to a 15-minute time frame. We have this 4-hour fair value gap. We have seen that London price, the Asia session high was open, London session high was open before at 9:30, like at 8 o'clock. Price came down at 9:30. It did sweep below this lows. This was sell side liquidity. Again, anybody entering long here, because see how there was this good move down here. We did not break it with that high. We did not break above with displacement. Hence, we are still looking for liquidity down here. So when the price came down, again sweeping liquidity, see this leg, it went straight up high. Now this is called as a displacement. After displacement, there is this breaker block. We are looking for a breaker block, full breaker block for entry points. for breaker block for entry point. Now if we move to a 1 minute time frame, we can have multiple confirmations on different. See, after liquidity sweep, there was this inversion of this fair value gap on a 1 minute time frame down there. So this was full fair value gap which was inverse. So if you would have taken entry right up here, putting the stop loss below this low, 99 points of risk, we could have easily targeted liquidity. As far as I know, there was yeah, see, have this, there was this high 346. We could have targeted that. Multiple exits, London high, Asia session high, and the other one. So this is how you form a trade. You form a bias of what price has done and what price can do. We are looking for 4 hour fair value gap or order block or breaker block, and then we are going down on a 15-minute time frame. We're going down on a 15-minute time frame. We want to see the displacement on the higher side. Once you see the displacement, you start looking for entries on 1 minute. Okay, so what's the price doing right now? So let me see. So right now price came down with a good selling pressure, like good momentum selling. It swept liquidity and now it displaced up higher. With strong momentum. So what do we have right here? We have breaker block. We have this as breaker block. Now if we move to a 1 minute time frame, we also have this 1 minute big fair value gap. Now once you have this big breaker block and fair value gap, this gives us a good probability that we can enter long here. That's why I marked it as here, right? Once I marked it as here, ideally the stop loss would be below the low, but now if we are using this fair value gap, if this fair value gap gets inverse, then there are higher chances that this breakout will fail and market will seek liquidity below these lows again. Hence, if we are entering here, the target is obviously this high that was created after displacement, while displacement, and we can target Asia session high. We have this accumulation right up here, so there's a lot of pool of liquidity right here at 24,943. so those are our targets. Now understand this part. Okay, so price came down. See how there is this inversion, bull inversion. Okay, I'm going to start deleting some stuff. This one. When the price came down with a strong momentum, it was bought back again into with this momentum. So this momentum candle is where your inversion occurred. So during inversion, you can either wait for this. We can enter here, putting the stop loss below the low, or, well, generally if your bias is clear, we can enter here and stop loss below here. Target will always be up higher, which are this Asia session high and then accumulation high. सोचा तेरे बारे पर पानी के किनारे बैठा. So these are the things that we are looking for. Why are we not taking any short entries right now? Because we are watching that the displacement has occurred up on the higher side. Displacement has occurred on the upside. Strong bullish momentum on a 15-minute time frame. Hence, until we take out this Asia session high, I'm not looking for any shorts. Yes, London session low has been grabbed, London session high has been taken out, but what I'm watching is the prices in 4-hour fair value gap. It is moving up higher, strong displacement up higher. I still want to wait. Now price is respecting this breakout block. I'm still waiting for this thing. Now because I cannot enter here, because maybe at 9:30 the price can start moving. But see how this bullish inversion fair value gap, or this fair value gap is still holding good. So this is how you make sure that you do not take short side trade. You have a bias, you saw a displacement on the higher side. There is still some targets missing on the higher side, which is Asia session high. Hence any short side setup here has higher chance of getting failed. This is just inviting shorts to enter the market and take out their stop losses. So I'm not looking for any short setup right here. I'm just looking for long setups. Yes, bullish inversion. Price is still up higher. We can always take this fair value gap. The risk is more. We can always take this fair value gap, risking just under this. So that would be what? That would be somewhat 37 points of stop loss, against which we're already getting 30 points. This is 1:1. As soon as we get 1:1, we are looking for break-even price. One thing what I've learned from this market is that you have to be aggressive sometimes, patient but aggressive. Once you see your setup, once you see it cleanly, you just enter the market. Once you have all your confirmations, you enter the market, you have your level. And if we want to be a profitable trader, then risk reward is going to be an important piece. On a day when you see that you're losing or your setups are failing, 2 to 3 trades, if you fail on 2 to 3 trades continuously, which means your perception of the market today, your understanding of the market today has failed, and it would be a good time for you to stop trading on that particular day. On a day when you're winning, if you're reading the market correctly, you're entering the market with proper risk reward management, and if you continuously are taking money out of the market on that particular day, I would say you continue to trade. There's no such thing such as over trading. Over trading is only when you're losing a lot. So you can have multiple trades there. See this exit high, this exit high. You can have multiple small trades like this, or you can have a good trade like this, enter and wait for the price to either get your stop loss or either give you target. The second one requires a lot of patience. Your entry should be good and accurate, and you should have patience for this kind of movements. Now because I've already analyzed the market today, I've seen a lot of wicks. As I in the start itself, I told you guys that price might not deliver higher or lower just because it is giving you setups. It can take your stop losses multiple times. Today is Friday. I've seen Fridays can give Certainly Fridays can give some good moves, but it can also chop. And looking at this price action, I'm not willing to trade today. One thing you have to keep in mind is that if you analyze the market, if you feel that price is not worth trading today, you should just close your setup and just leave that trading day. Because what happened is, like, yes, we could have seen yesterday we had two setups yesterday morning. We could have captured like about 100 points. I think more than that. Yeah, even if we one trade was 1:5, one trade was 1:4. So even if we would have risked about 1:4, even if we would have risked about $200 per trade for the whole trade in itself, we could have got out at we could have closed the day at $1,600 or $1,800, right? So once you analyze that these were the two trades, I'm not getting any good setups now. If you're done for the day, just done for the day. What I have observed in this market is that you can trade certain momentums. Like some guys are good at trading and opening, like the first 15 minutes. Generally, the other guys would prefer that they should avoid first 15 minutes. The first 15 minutes is where you can get thrashed. There is a lots and lots of volatility at 9:30. It can chop a lot. Certainly a good example is yesterday's New York session opening. Now see, market opened up here at 9:30 till 9:41. It is still just chopping. Multiple traders. Yeah, if you go on a 1 minute time frame, you don't see any kind of entries here. You don't see any kind of entries here. But yes, if you start going into a 30-second time frame, 15-second time frame, and you start entering into trades, you can get thrashed a lot. So generally, trade the momentum. Some people with like support or resistance or something like that, if they short here, they could have made money. Short here, made money. Short up here, made money. Buy up here, buy down here, made money. Trading can be done multiple ways. What we are looking for is this. Just we analyze we have our top down analysis. We start from daily time frame. We see where the price is heading or where the price. So daily bias helps us determine where the price could move. Like who was strong yesterday. It helps us analyze that those particular guys can come in today as well. If you move to a 4-hour time frame, you'll be able to see that this is an important level. Right? 4-hour fair value gap. Now on a 15-minute time frame, what did it do? It is continuously putting out liquidity right here. If you are strongly biased, what we are looking for is like the sell side liquidity got swept, good displacement. Now these are the kind of setups which are so good, clean setups. Like this, you can easily see liquidity grab, market structure shift, and then we have a good fair value gap right up here. Enter at fair value gap. Simple. Because the price is below London session, yes, we can take longs on liquidity sweep depending on what you want. So this is simple. Even if you would have risked here, it's 2.68 on a longer time frame, because we can also target London session highs. So this trade, the other trade was 1:4.5. So if you would have risked 200, you would have got 900 out of it. Okay, I'm going to give you guys one more thing. always like this displacement. If you're looking for displacement, like see how these are three strong candles, three strong candles, right? These are three strong candles. Now this is, I would say, good displacement or good strong momentum. And if this is pause and it came down with strength, now this becomes our bearish inversion fair value gap. I've seen, just remember this kind of structure. Remember this structure, this V shape. Now this V shape is important. This V shape is important. If you would have raised, I think you could have got 1:2. Liquidity has been swapped. You can also go for here, but has 1:2 been achieved? 1:2 has been achieved. As I told you, it can take your stop losses multiple times. Today the market is not in a, it has given us information that it is chopping a lot. It can take your stop losses multiple times. There was a time when I used to think that this is also a market structure shift. All the prices coming down, went up high, came down here, went up high. But over the period of time, I understood that we can avoid this kind of market structure shift. If you're looking for longs, then we are looking for this fair value. Now there is this fair value gap. So this is a fair value gap, right? This is fair value gap. Now if the price breaks above with displacement, without any kind of pause like this, then we can look to enter. Longs, because we are long biased. We have seen displacement on a 15-minute time frame. That is the only reason why I'm talking about longs today, not shorts. Still, I'm long biased. Doesn't mean I enter at any point. I'll just try to take all the long setups, not the short setups. That doesn't mean that the short setup won't work, or that doesn't mean that the long setup won't fail. And here is where risk reward comes into play. If I lose on 2 to 3 trades continuously, I'll close the setup. So this was already like 47 points of stop loss, against which we got 90 points, almost close to 1:2, more than 1.75. there would be no reason for us not to take loss in this trade now. So yeah, break even exit should be good. If you have your bias correctly, you'll start picking up trades correctly, like setups correctly. A bias is important. Bias is important. Once you have your bias right, you know where the price is heading. You kind of have if you would have read like sell side liquidity has been grabbed, now it should be heading for this highs. At that point of time, you can simply enter long and take these as target. Now what I'm seeing is like there's this breakout, could fail. It can also come down to here. I'm not looking for any trades right now. As of right now, the price is still just moving up and down. Okay, the most important thing in ICT concepts is you can find multiple fair value gaps. There's a fair value gap here, there's a fair value gap here, there's a fair value gap here, fair value gap here. How to select that fair value gap and how to select the fair value gap which can give you a good entry point. If we are watching like right here, price did break down, this also becomes a bearish order block. Some can take this one, some can take this one, but this is a bearish order block right up here. We can also check like this is a downtrend move, down move. So this side, the bottom side is discount and above 50% is premium zone. This below 50% is discount zone. So what ICT recommends is like take fair value gaps which are, if you want to short, if you're looking for fair value gap entry, then you're looking for fair value gaps which are in premium zone, which is right up here. Okay, let me just clean up something. Going to delete this one right now. So see how this is a good displacement leg downside. Did it take out any liquidity? No. These ones? No. So because it left the liquidity up higher here and this reached a certain high up here, I'm not entering into any short position right now. But if it would have taken out a liquidity, the first thing to enter is the price should have taken liquidity. Right? The price should have taken the liquidity. Once the price takes out liquidity, we'll look for the displacement leg on the opposite side. Now, if for example it took out this, for example, price took out this buy side liquidity, closed above, and when it came down, it created market structure shift. So what we are watching always is like, if you want to spot out the reversals, then while grabbing that liquidity, did it create any fair value gap? Did that fair value gap get inversed? So this is what you have to be looking for. Like this is a bear inverse fair value gap, which was a bull fair value gap, but it pierced through straight down, and that becomes your entry point. You can always enter here with the stop loss of high and targeting the lows. You can find multiple lows up here, you can also find lows up here. Okay, so this is how you see you find out the liquidity, liquidity sweep, displacement downside, displacement on the opposite side. Did it inverse any fair value gap? Yes, then we can enter on bearish inversion. Did it did it like if the price pulls back, what are the fair value gaps that we are looking for? So first of all, we mark from swing high till swing low. What we have is 50% here. Below it is discount zone. We want to sell in premium and buy at discount. So if we are looking for bearish fair value gaps, we are looking for fair value gaps which are up here. There's this one. There is this one. There are multiple fair value gaps here. So at any point, if your bias is right, the price touches here, you can always enter here at this 50%. It is called as consequent encroachment, I guess. Yeah, simplest reason, there is this order block, there is this small order block right up here. Both of them get overlapped here, so this can become a good entry point. Stop loss above the highs. Ideal stop loss is always above the highs, but if we are depending on the risk, we can also make this one as a stop loss. This one is our stop loss. So this is how you enter the trade. Okay, let's look at the same example here. There was a liquidity sweep. See how the liquidity was swept, went up straight high. Look at the displacement leg. There's strength in it. So here is your bearish fair value, here is your bullish fair value gap. Now there is only one fair value gap here. There is this breaker block, bull breaker block right up here. So if you have breaker block and fair value gap here, that becomes a good confirmation that your entry point, that this fair value gap can work, higher chance of working, because there is also a breaker block and a fair value gap. So this becomes good. Then you can start targeting up higher. Once you see even up here, it left out a fair value gap here, but see how this becomes a block. This becomes another order block right up here, small one. Price broke above, retested, went up higher. If you can see, same thing goes up here. Order block, bullish order block. Breaker block is something which is when reversing. Now these are the order blocks. It is respecting all the order blocks right now. Same thing goes up here. Order block up here, went up higher, it touched the order block, it's going up higher. Simple things like this. What are we watching right now? We're watching a consolidation here. Price can continue to do this and can grab the lower side liquidity, move up higher, or price can continue to move like this, take out high and then head lower. Okay. Simple concepts. For you to enter any market, liquidity levels. We are always looking for liquidity levels on a 15-minute time frame. I've seen 15-minute time frame can give you good liquidity levels. 4-hour fair value gaps, 4-hour order blocks, daily order block, daily fair value gaps. Those are the things that gives you a major pool where big amount of order can come, which can decide the bias for the day. And then if you're looking for entries, If you want to pick up a side like this, now this is a good bull side displacement, good buy side displacement, good buy side displacement. There's this order block right up here, there's breaker block right up there. Both are working, both are still supporting the price. If we move on to a 1 minute time frame, what can we see? We want to see this kind of leg coming, like this kind of leg, right? I want to see a strong bearish momentum downside, and against which I want strong bull side displacement. Now during this bull side displacement, if the price is doing a bull side displacement from this bullish order block, then I'm looking for either breaker block, fair value gaps, or inverse fair value gaps. Market is about to open in 3 minutes. First 15 minutes, if the price is choppy, we'll try to avoid trades in first 15 minutes until and unless it gives us a good clean setup, like good clean displacements like this. I'm still bull biased because of 15-minute displacement, 4-hour fair value gap, and I'm still bull side biased, but I'm not going to enter market just because I am bull biased. I have to wait for the setup, I have to wait for the liquidity sweep, and then displacement, bull side displacement. It should have left bull fair value gap or breaker block. Those are certain conditions that are required. You can always have a bias, the chance of you being right is 50-50. What increases your odds or probabilities of winning is your setups. If you select the bias correctly, 50% of your probability of winning increases to 50%, right? Now depending on the setup, like now if there is a bull fair value gap but it was inverse and you're still long here, you have a higher chance of losing. Hence you always have to wait for liquidity sweep on the downside, then let's see the bullish displacement on the higher side and enter on inversion order blocks or breaker blocks. That will increase your odds from the remaining 50% will increase to 75 depending on the bull side displacement, right? So once you have all those things aligned, then you enter the market, your chance of winning will increase. But there's still one thing odd today, which is daily bias is bearish. 4 hour and 15 minute is bullish. 4 hour is not bullish right now. It's just that it is in full 4-hour fair value gap. That's why we were targeting this longs, and we were targeting longs because what we noticed was there was this accumulation, manipulation came downside, and it could start moving up higher. Let's go to a 15-minute time frame. What's happening? 15-minute time frame. Displacement on higher side. Bullish order block. Onto a 1-minute time frame. Market has opened. There's no bearishness. Did not move. Not move much. Yeah. It is piercing through that order block. See these kind of moves, now this kind of moves, even if it closes up higher, I cannot say that the liquidity has been swept because of this one candle. I need multiple candles to make sure that liquidity has been swept, like this liquidity sweep. I need multiple candles like these where a fair value gap inversion or market structure shift has happened. So this I cannot say that it just inverse. Yeah, I can go to 15-second time frame, 15-second time frame, 30-second time frame, and try to look for that. But we generally trade on a 1-minute time frame where it gives us good fair value gaps and good risk reward. Until and unless it doesn't give me the same structure here, we are not entering into trade. Yeah. No trade is also a position. You always have to make sure you don't give away your money to the market just because you're feeling that this is the bias for the day. Yeah, the chances of you making money and the chances of you losing money is always 50-50. Even if you analyze the whole market correctly, bias is correct, you have the level correctly, market could still go against you. Take out your stop loss, or take out your stop loss and maybe then move into your direction, or maybe just your market can prove your analysis wrong at any point of time. Two minutes gone, market is still just chopping. As I said, there's this order block right up here and it is working correctly, but we are not entering this market right now. Only simple reason because we do not have this any kind of setup. You would say this fair value gap inversion, something like that. I do not see any structure in this. I do not see any structure in this candles. Will I enter shorts here? No, because the price is in 4-hour fair value gap. 4-hour fair value gap, 15-minute displacement is on a higher side. You have 15-minute full order block which was supporting. That is the reason why I'm not taking any shorts here. Could it work? It could. It could work, but I'm not entering this trade short here where multiple time frame and the market context is saying me that the price should be moving higher instead of lower. Hence I am not taking any short entries. I would wait for a clean setup when all my analysis and my setups are forming in one direction. If I'm bearish biased, if I'm bearish biased and I'm getting bearish setups, I'll take those setups. So this was our first trade right up here somewhere. Yeah, 29.26 right. Target is this, then the target was up higher, right up there. Yeah, this was our trade this morning. I'm just going to watch if this trade delivers or not. We are already out of this position because price has already given us almost 1:2. We would have stopped out at break even. No trades for me right now. Price is just range bound. It is not going down, it is not going up. And this time, in this kind of situation, like what we call as accumulation, manipulation, and distribution, we are right now the price is getting accumulated. It is indecisive. It is not able to move down. It is not able to move up. In this kind of situation, we let the price break out on one side, show failure, and then we can target the other side as liquidity. Right now, if price takes out this high, if the price takes out this high, shows us a bearish displacement, we could target the short side. Am I biased? Bearish bias. Daily time frame says bearish bias. Well, if this displacement was pretty good, yes, the displacement is still working, but if this displacement was good, if there was a bullish bias, then the price should have headed up higher immediately. But right now it is not doing so. So am I changing my bias? No, not right now. We have to wait for price to take out the wait for the price to take out the sellers first, like sell side liquidity, and then move on to downside. Right now what is happening is, looking at this displacement, there will be lots and lots of buyers trying to buy up at this level. So if the buyers are trying to buy at this level, where would they put the stop loss? Down here. So this would be like a good target for short sellers to target this level. If the price goes down here, then if the price goes down here, sell side liquidity, it takes out sell side liquidity, there are higher chances of all the bulls exiting the position, and we can have a good flush downside. and all the buyers are stopped out. Yeah, the price is still heading downside, taking out all the buyers. To 100 points of risk. Yeah, if we move down to 30-second time frame, 15-second time, 30-second time frame, there's this inversion. See now how this fair value gap was inversed, how this fair value gap was inversed. Generally an entry for long. Still Friday, still avoiding trade, just doing the analysis part. The risk here is too much. Even on a single contract, if you would have entered, it's like $216 worth of risk on a single contract. What's the target for this? 257, $500 profit for 216, 1:2 for that. But that's at extremes. The entry that we are kind of looking for is like this. Smaller risk. Even the first target is giving us a good risk to reward. Here the first target is not giving us good risk to reward. 137 points against 108 points of risk. So this is the kind of trade we want to avoid. Asia session high is still open. I'm still if we would have switched to 30-second time frame, your entry would have been somewhere closer right here. See how this V-shape inversion? So this becomes very important. This becomes very important now. Now all of a sudden your risk to reward becomes so good. Like each session high in itself is 2.48. What? So what happened? Price chopped, took down sell side liquidity. Now it took out the day high. New York session opened. Like New York session opened at 9:30. The high that it made has been taken out. Still looking for Asia session high. We're still looking for accumulation high. Accumulation high is at 942. And that is Asia session high has taken. Risk was too much. We did not enter the trade, but it worked out the way we want to see. Equal lows, liquidity grab, bearish fair value gap inversion. 30-second time frame would have been a good entry. 1 minute time frame would have been a little bit riskier. It did sweep Asia session high. We are looking for consolidation high. We're looking for a consolidation high, but this is where we generally take out partials. Everything here is just runners. Just give me a second. Welcome back, guys. As I said, the market is moving. It is giving some of the target, but not all of it. It's Friday. See how it is choppy. It's rain bound. See there are multiple wicks from higher side and lower side as well. Look at this 1 minute time frame. It shows you the same thing. Hence, no trades for me today. It's Friday. I'll be closing the stream today right now. We'll see you guys Monday. We'll start making money on Monday. Analyze properly. Get used to the setups, learning, reading what the price has done, what the price can do. As I said, there would be 3 days, at least 3 days, where the market will give you such good and clean setup. Like even today, there was this good setup with a good risk to reward ratio. Market always provides you with this kind of setups. You just have to be waiting. You just have to wait for that perfect setup to occur, and once that occurs, you have to be aggressive. Just go into that setup. Learn your setup, master your setup. Once you do that, it becomes easy to spot out this setups. Once you see the setup, you enter that consistently, you will realize that this price momentum is just nothing. Once you start reading the market correctly, you will not be afraid of the market. The selling, if you read the market correctly, you will not be afraid of the selling if you read the market correctly. Okay, so we are going to close this week. Since last 2 days we did not trade, we did not take any trades. We did mark out 4 trades. We did mark out 4 trades. 3 of them were live. This one was a trade recap, which it could have worked. So, recap for the day. When do you want to enter the market? When a liquidity has been swapped. As per ICT, liquidity has to be swapped, and the price should be on a higher time frame level of interest. It could be 4-hour order block, 4-hour fair value gap. It could be daily order block, daily fair value gap. Once you find those level of interest, you start looking for liquidity sweep. Liquidity sweep is not just here or just on the leg down. Liquidity sweep means on the leg left, which was on the left side. Okay, like the lows here. Once you see that the liquidity has been swept, you look for the market structure shift. And market structure shift. That market structure shift has to be done with a good displacement. Strong momentum. This shows a good price reversal. You'll find out there will be breaker block, order block, fair value gap in this. You enter at that. Stop loss below the lows. If you're shorting, stop loss below above the highs, and you target the opposite side liquidity. Once you master the setups, once you start looking at things, once you start looking at the price this way, you'll find out that trading becomes so easy. You will stop entering the market in here, in between here, or in between here. How do I select the bias? I wait for 15 minutes to displace up higher with a strong displacement. It's like this. Like, see how there was this fair value gap here, which was inversed with strength. Now this shows me the trend. That the price is now moving lower, and this is target, this one is target, and multiple targets, right? We're just looking for short opportunities. That's how it works. So see you guys tomorrow. See you guys Monday. Avoid trading. I would suggest avoid trading because there is a lot of chop. I recommend these things to myself. Like I would not trade here. Yeah, the price is like full bias. It could move up higher, it could take out this liquidity, it could also move up till 25,520. But looking at the chart, I'm not interested to take any trades, and it should be good. See you guys Monday. Have a good weekend.